Colorado Springs on a bright Saturday morning. I hope you all are doing great with your shopping on Amazon with the Black Friday deals. There's a lot of interesting stuff out there. The Bond 50-year special is I've been doing these for a year and a half, and we've built a big critical mass of traders. Thank you for your trust and for sharing your Saturday with me. Hey, let me put my video up here so you can see me talking to y'all. Anyway, my 30% rule, and I cover this whenever I get a chance, is figure out how to make winning days, even if it's just a few $100, but a winning day, even if you're only right, say 30% or less of the time. Here's an actual trading day. I ground out a lot of trades, really small stops for a big percentage of winning, I should say big percentage of losing trades, but I still made $660 net profit in my account, being right less than 30% of the time because I scaled into winning trades and took small stops on the rest. How many of you are day traders? Show of hands. And how many of you are swing traders? I should say show of hands when I do my live events, y'all live. Type in the word day or swing or both and let me know. Be interested to see what kind of traders you are. Here's a good example. MGM has been my #1 favorite and biggest capital holding in my Fidelity account this year. It's gone from 10 to 20, so that's kind of nice. I'll rebuy and get in again over 22. Anyway, day or swing, wow, a lot of answers. A page full of answers here from everybody. It's neat. Hey, thanks, Charles, for the question. And happy Thanksgiving, everybody, too. So we got a lot of both. Okay, good to hear. Hey, I've got a couple of deals for y'all later. Hopefully you had a chance to see me in Vegas. Our trading strategy of the week, put this down here, trading strategy of the week is going to be how to trade year-end volatility. And we're going to take a look at some of the very specific sectors and market breakouts. I'm here for the next 28 minutes, so these are fast-paced, and so I want to jump into it. Let's get started already, Ken. The S&P, we had a shooting star in Friday's markets. That's the daily intraday chart. You can see on the daily candlestick chart, we had a shooting star on Friday, so we do not want to buy until we're at new highs. Doesn't necessarily take us out of the market because we have support at the 1800. Okay, so I'm going to use 1795 as S1 and start fading back to cash on my open swings. If our S&P loses 1795, my key resistance level is going to be 1818. I'm going to look at new highs. If we get just around 5 points, 4 or 5 points, 4 or 5 sticks above the current high. So 1818 is R1 and 1795 is S1. So that's my trading box range for the upcoming week ahead. We're still in a nice uptrend continuation. As you can see, previous resistance becomes new support. We have a breakout, pulls back, launches to new highs, pulls back down to support, and then continues on its merry way. So we got a still uptrend continuation, but caution for the week ahead. If we lose support under 1800, start scaling out of open swings. Now, for those of you who are new, we're going to be looking at stocks for swing trades, day trades, gap stocks, ETFs, Forex, and E-mini. So we cover all markets in the next 25 minutes. So let's take a look at some of the best picks. And again, I apologize for being gone the last couple of weeks. I was a featured speaker at the Money Show. Here's a replay. It's only going to be up for the next couple of weeks, so be sure you watch it if you haven't already. Apologize for repeating for those of you who've been here for a while, but I got a lot of traders who just logged in. It's a 30-minute how to trade advanced momentum breakouts, and that'll be streaming at least through December 14th, I believe. So take a look at that later today if you get a chance. Okay, let's take a look at my picks for the week ahead. First up, Bank America. Financials have been okay. We've seen relative strength in our pharmaceuticals and solars have been two of the stronger sectors. But take a look at BAC. It's a cheapie, but it's gone from 14 to just under 16, so reasonably strong breakout continuation. It's gotten quiet the last few days, but keep an eye on it if it takes out 16 in the week ahead. Next up, we've got Coach. I buy my wife Coach, Burberry, Louis Vuitton, diamonds. I buy her all kinds of expensive handbags. I don't think all the buying that I've done has led to the stock price increase, but I'm sure it didn't hurt. You can see minor gap continuation in Coach. COH, the ticker. Vera Bradley, also good for handbags to the ladies. Anyway, my wife's been keeping them afloat, buying dozens of bags from them lately. It's all good. She's got a shoe collection that would rival that of Imelda Marcos. Anyway, you can see Coach, bullish cut breakout continuation runner. This is one of my favorite charts for the week ahead because it's ran all the way from 51.50 up to 58. So that's a 7-point run on a $50 instrument. Really nice uptrend continuation and high volume on the minor gap continuation. So Coach looks strong. Next up is Hertz, Rent-A-Car. You can see it's been in a congestion. What I like about this is we've got a ascending triangle on the 15-day. And this is my favorite swing trading chart. For those of you not familiar with how I professionally swing trade the markets, I use a 15-day, 15-minute candlestick chart. I also use the 90-day daily candle chart. Anyway, Hertz, uptrend continuation. My favorite retailer is Macy's, and Macy's, another gap up continuation. Congratulations to those of you who wisely invested in my How to Trade Gaps training earlier. It's no longer available, but for those of you who were smart enough to order that a few months back when I did it, hopefully you've been profiting handsomely from applying what I teach you guys, is how to trade gaps up. Right? That's my favorite single play, is minor gaps that continue to run on up. Macy's no exception. It's gone from a base of 46 to 54, an 8-point run. That's 5 plus 3 points, 8 points, and a run up in Macy's. So really good play in that. You can see a bearish engulfment, however, and a warning sign. And if you look at the daily candlestick chart, would not surprise me if we did see not quite a bearish engulfing, but a lot of selling pressure Friday. The whole real body of the candle's not below this candle, but we did have an engulfment at least of closing range price action. We closed a little higher than that, so that's why it's not a bearish engulfing technically. But still, it's a nice uptrend continuation. I'll be looking at longs in my own account for Macy's if it breaks 54.50. Next up, Vertex Pharmaceuticals. Last but not least for my swing trading picks of the week, VRTX. You can see this one's gone from 60 to 70. So that's a 10-point run. Booyah! It's taking out new highs. You can see minor gap continuations. A really strong play. I like the technical uptrend in this one. What I like too is volume at each new high. Here's a new pattern to write in the playbook. See this new high volume? That volume day is much stronger than the previous 3 days on significant ATR extended price action. It's moved beyond the average true range. If you look at a candlestick chart, you see what I'm talking about. Wide range candle days tend to lead to additional volatility. Now on the daily chart, we have a shooting star here, so we don't want to buy it until we break above that. Notice, please, on the 90-day chart, it's very important that you combine the daily chart, if there's any hammers or shooting stars especially, or bullish or bearish engulfment patterns at the 50, 100, or 200 MA lines. And you can see here we have perfect resistance. This is telling you to sell or fade short any loss, okay, any loss of support. So this one, actually, I would be conservative. I'd avoid the chop. I'd go short under 67 and long over 71.50. Remember I said that. Okay, come back to me next week and tell me how that will work out. You see how big the move is. Either way. Anyway, Vertex Pharma, really good play. For day trading charts, I've got 3 for you. First up to bat, Healthcare Associates, HCA. What I like about this one was Wednesday's price action. It ran from 45 to just under 47. Nice open range break that pivoted in Friday's price action. HCA has been reasonably strong lately, so keep that one on the radar for potential day trading setups. Next up, 2 oil plays. And by the way, we're going to look at year-end volatility in a few minutes. And my 2 favorites, one of my 2 favorites in that sector, one is Tesoro, TSO. Didn't do much Friday, but look at Wednesday's price action. Big, huge run up in TSO. So keep an eye on that for potential day trades. We just want to trade these opening range breakouts that move at least 30 to 50 cents on the right side of the chart. So when we get a breakout that moves to new highs for day trading entries, keep an eye on that one. That one may just do right by you. The other one is Valero, and you can see another huge open range break. And we're on top of this one in the live trading room yesterday as well at tradingtheopen.com. But you can see Valero, really nice open range breakout in that. This one ran from 44.25 up to 46, so it's a 2-point runner. So as a professional day trader, or day trader in training, or swing trader, or somebody just trying to trade for a few extra bucks on the side, as the case may be, what you want to look for are these strongest wide price action moves to continue at new highs. So you stay clear of it unless it takes out new highs, but we want to see if we get a repeat of that price action on the right side of the chart moving forward. Okay. Next up, let's take a look at our gaps. 2 gappers to keep on the radar, actually 3 with blocks. One is HPQ. Okay, this one did a gap up above the previous cut pattern range. Had a gap down, continued down, gap up, continued up. We'll see if this one takes out new highs over, say, 28 in the week ahead. Next gapper, SCTY. And you can see that this one's done minor gap continuations up and down. One of the things we want to look for are whether or not it continues. Here's a good example of a 3-day chart. Again, this day is blank because that was Thanksgiving, but you can see a minor gap that ran on up another 2 points. And those are my favorite single professional day trading plays, as you can see illustrated throughout my Stocks and Commodities, Active Trader, Money Show, Equities.com, and other publications and articles around the world, seen by tens of thousands of smart active traders, by a real trader, unlike the competitors out there who mostly don't trade. Anyway, minor gaps that continue are my single favorites. Always look for cut pattern new highs or 35 cents to 50 cents above highs. Anyway, SCTY, nice gapper. The other one that's moved lately is BLOX. A big gap down. This would just be, I prefer to just short it under 31, right? And again, under 30. That would be the best play. You might want to look for a potential pivot over 33. But the fact is it's sold down from 38 to 31, so with the 7-point sell pressure, it may well continue its downwards trajectory. So keep an eye on BLOX to see if it has new blocks to the downside in the upcoming week ahead as well. All right, now let's take a look at our exchange traded funds. Reversal play or potential reversal play is FAZ. We have a relatively wide range green candle. The markets are still long, but if they start to sell off, which they may well, I remember seeing an article on one of the financial news sites where a very smart, well-respected journalist was saying we may well be in a speculative bubble that may burst. And I agree. I see no reason for all this irrational exuberance in the market. I'll still trade it. You know, I trade to make money. I'm trying to make new money on new high breakouts. But what I like about this one is, again, a bullish engulfment of the Wednesday price action. This is something I teach traders in my professional courses and live room and alerts and the rest of it. See how it started from below and then moved above? That's a bullish engulfing pattern. I don't know if we see that on a daily chart. It's hard to see, but on the daily candlestick, that is a bullish engulfment, just barely. If you take a microscope to it, yeah, that's a technical bullish engulfment. It started from below and ended above. So that's a reversal sign. This is a short ETF, FAZ, one of my very favorites. I was even trading this back on the flash crash day a couple of years ago. Anyway, when the markets go down, these things go up. Hey, look, use of hand gestures. My competitors, they're not professional trainers or traders, so they can't compete. Ha. Sucks to be them. Anyway, keep an eye on FAZ. I'm going to look at it myself if we break over 23.7 and 24.25 or so, 24.20. So if the market plummets next week, keep an eye on FAZ. Couple others to watch for. TZA, another inverse or bear ETF. If the markets sell off next week, this one will pivot up, right? So I want to take a look at this one. I'll likely be buying in at 18.50 and again over, say, 19.25 because it's right above that resistance, that shooting star right there. So if we get a pivot into the previous range, I'll buy here and I'll buy there. Last ETF, and then we'll do our E-minis, and then our Forex is XIV, and then our forecast and look at how to trade year-end volatility session, all packed into a quick 30 minutes. Let's all take a deep breath, because Ken talks kind of freaking fast. Slow down already, dude. I can say that with humor because I have hundreds of you here. It's great. Let me ask a quick question. As we look for new entries, and we're looking for breakouts, how many of you agree that we should be relatively cautious going long into the year end, into the last few weeks of the year? How many of you would agree that you might want to be a little careful? I'll still trade the upper right side of the charts. That's what I do. I'm a professional breakout trader. I'll make this look right. In the upper right side of it's inverse for me. It's mirror image. So anyway, go from lows to highs, but I want to do so cautiously. Right now is a good time to take profits or tighten in trailing stops. If you've been trading long and correctly as I have this past year, we're in the money, which is great, but you want to protect as much open profit as possible. So now might be a good time to be a little cautious, right? We have to do a little more cherry picking when it comes to isolating the strongest sectors out there, like solars or pharmaceuticals or finance or retail, whatever sectors. Those are all 4 strong sectors. Keep an eye on those during the tail end of the year. But just thought I'd ask, how many of you? Yes, be careful. Big money locking in profits, question mark. Yes, agreed. I agree with being cautious. Okay, a lot of yeses. Good to hear. Hey, thanks, Pat. Good to know that. You're right, Larry. You're correct. Yeah, Rick saying totally agree. Crowd gets overzealous. Good time for a crash. Yeah, absolutely. So, with that, be sure that you're looking for plays. I like trade. You can look on my live the trading talk brokerage screen caps of examples. FAZ is good. At SDS, the VIX instruments like the cheapy TVIX or VXX. Those all go up when the markets go down. They've been going down, but notice a relative bounce in these. The VIX-tied instruments, the VIX-tied inverse ETFs, by the way, tend to kind of lead the way, just like financials do for the broad market. And gold and oil, the commodity hedges, give you a bearish or bullish sentiment. Gold's been down a lot lately. You can see the VIX-tied inverse ETFs like VXX often bounce when the market, well, they'll always bounce when the markets go down. So keep an eye on those for potential plays. FAZ, QID, all these instruments have been sold down aggressively this year. Swing trading those to the long side, and I'll be covering how to do that in the upcoming advanced the swing trading success event. But anyway, swing trading those to the long side if and when they bounce. You know, you don't want to buy this shooting star at a 50 MA, still sellers in charts. We don't want to buy yet, but if we see a two-candle reversal, two candles green, it takes out new multi-day highs, then that'll be a multi-day low in the broad market. You want to be a little aggressive about that. So we've got so many great plays out there, but you have to be cautious. That's my tip for the week ahead. All right, let's take a look at our E-mini charts for the week ahead as well. My triggers, I'm just going to give you a long and a short. The resistance trigger is 1807.75, and that's just a couple of ticks above the lower shadow of this hammer. See this hammer? Sells down, there's a hammer. For more on candlesticks, learn from Steve Nissen, and only learn from Steve Nissen. Okay, there's a lot of self-proclaimed gurus who are more marketers than anything out there pretending to be candlestick experts. They're not. Steve Nissen's the #1 and only guy you should learn candlesticks from. I've worked with Steve for over a decade, and I would say that, and I know more than these other self-proclaimed gurus about candlesticks, and I would say I only know maybe 5% what Steve Nissen knows about candles. He's the world's top expert, and I've been working with the guy for over a decade. So learn candles from Steve Nissen, then combine it with the Western technical breakout patterns that I teach you guys. Don't waste your time learning candles from all these internet marketers who are Johnny-come-lately experts. That would end badly for you. Learning how to trade, the nuances of how to manage trades in combination with the candle patterns is another area that Steve Nissen shines in. So make sure you learn how to do that from Steve. Anyway, not to say that out of loyalty, because I'm a big fan of the guy, the biggest fan, because it works. I've tested out what Steve teaches in thousands of real money trades the last 12, 15 years, and the only reason I work with him is because what he teaches actually works in real trades. So learn from Steve Nissen and myself. And Peter Bain and his crew over at the ForexMinter.com site for Forex. You know, keep a short list of people you learn from. Anyway, here's hammer. Anyway, I don't want to do trading 101 stuff. 1807.75. Okay, the reason for that trigger is it's just a couple of ticks above the low of that hammer. So that's the technical reason why. It's a recovery of a bear cup drop. An in-trend momentum continuation. I've got 1801.25. Okay, and that's right about here. Yay there, right under the low. 1801.25 is S1 for the E-minis, for the ES for the week ahead as well. So keep an eye on those triggers. Because, of course, all my competitors who run E-mini chat rooms are frantically writing that down, and they're going to try and say that to their traders. Yeah, but I was there first. Anyway, let's take a look at our Forex now. And then I will open it up for, and then I will do my strategy session on year end, and then I'll open it up for Q&A. Guys, I can stick around and do questions until about quarter till the hour. Then I've got my trading the open live room bonus session coming up at 11 o'clock Eastern. So I got to close this shindig at 5, 10, 15 minutes before that, so I have time to close it and open up the room for the other people. Anyway, what's moving the best in our Forex markets is Euro is long and the Japanese yen is short, so keep an eye on these. My top picks for the week ahead in Forex. The Euro yen at new highs, right? That's one of the strongest patterns out there, especially over 140. That'll likely trigger new buy orders if we get, say, 30 to 50 pips above 140. So look for new high breakouts in the Euro yen. You can see cups. It was great to see all the traders at the Forex Live Profits event at the MGM Grand with Peter Bain and myself and Vic and everybody else there. So really neat to see so many smart and nice people there. So it's great to meet all of y'all. Anyway, the euro yen, nice strong uptrend continuation. The euro CAD is interesting because typically the euro yen and the euro CAD aren't really correlated. They usually don't lockstep. But in this case, because there's such a strong move in the euro against the Canadian dollar as well as the yen, that tells me there's a lot of underlying institutional buy pressure in the euro. So we don't want to buy it here because it may be at new highs and may drop. But if it takes out additional new highs, keep an eye on all the euro pairs. The euro CAD, the euro Canadian dollar is up to new highs. A nice uptrend continuation. And I teach traders how to use ADX over 30, which would have got you in great on a cut pattern move up. We'll see if it takes out new highs over the 1448 in the euro CAD for the week ahead. I've got two more pairs for you. The pound yen, again, that's highly correlated with the euro yen. The British pound and the Japanese yen is also taking out new highs just under 168 right now. So see if the euro yen, I'm sorry, the pound yen takes out new highs just like the euro yen. Almost the same chart up over the 140. Okay, notice how similar those charts are. That's the euro yen. Here's the British pound and the Japanese yen. And even if you're not a forex trader yet, it's still interesting to learn the chart patterns and how to apply what you know in the stock markets to your forex trades. That's what I do. I trade both in my Interactive Brokers account, and I don't have to use the different mini and micro and standard lots and all that. I just trade the number of dollars of the underlying currency, which simplifies it. And just $2 commish. Don't have to worry about comparing pip spreads and all the rest of that stuff. Anyway, you can see the pound yen, nice new highs in that. And last but not least, for my forex traders out there, I've got the US dollar to the Japanese yen. That's the weakest of the three. Okay, relative strength, that's not as good a chart as the pound yen or the euro yen, but still it does behave itself when it takes out new cups. Okay, so this is one that's worth keeping on the radar. If it's able to take out new highs, I would use 102.8 as R1. So keep an eye on strength in the euro, weakness in the yen. It's a big picture playbook for the week ahead for all my forex traders. All right, let's move on. My strategy point. And see, this is a lot of good free content, right? Pitch free. Anyway, strategy point is how to trade year-end volatility. And there's three things I want you to look at. First is the strongest or lead sectors and or currencies, for that matter. If the euro keeps running on up and the yen keeps dropping, well, capitalize on that. Trade that. That's what I do. I like to trade what moves the best. Strong or leading sectors. I'll show you some charts of what I'm looking at for my own trades in just a second. Second, you need to put together just a very quick and dirty 3 to 5 lines written out on text, in a notepad file or on a physical pad of paper. But what's a trading plan that you've got for the year-end volatility? If-then conditionals. If the S&P takes out this high, how are you going to trade this sector? Whether it's something like the solars have been strong lately, or pharmaceuticals, or retailers, or banking and finance. How are you going to trade weakness in gold? How are you going to trade strength in oil? How are you going to trade that stuff? What's your plan? Just develop a quick, very easy to follow thumbnail checklist. That's what I encourage you to do. Bullet item, 4 to 5 items at the most, a checklist of things to remember next time you're in front of the markets to trade. And entry and exits defined. So for this, I'm going to take a look at the daily chart. And then we'll look at our cash charts for my live room members as well. Okay, what I want you to pay attention to for year-end volatility is if there's any re-emerging strength in our solars. Okay, for example, Canadian solar, it ran from 12 to 32. Okay, that's almost triple, right? Almost a 260% increase in just 90 days. Boom. Think it might be a little overbought? I don't know. I don't see any strong bearish reversal indicators. Some price action weakness. Major support in CSIQ is right here at 26. What I want to see is, is there going to be a pivot back over 30 and again up at the new highs over 34? What's that going to do? But CSIQ is one of the solars that I like, and also First Solar, FSLR. This one ran from 36 to 64 in a matter of weeks, right? And this one had nice uptrend minor gap continuations. So your plan for volatility should be to isolate the strongest sectors, of which solars is one of them. And here's my 2 favorite charts in that sector. It's just a drill down of how to implement that professionally. Another good sector is retailers. Now I told you Macy's earlier, and you can see here on a 90-day chart just how strong the underlying strength of Macy's is. Now, we had some sell pressure Friday, yesterday, so we don't want to go long yet, and we had a declining sequence of whole real bodies of candles. Remember, what's the story of the height of the candles? Is it increasing, showing additional momentum to the upside, or is it declining? Okay, that's something I published in my articles, which competitors try and copy all the time. But one of the things that lamers. Anyway, you see bearish upper shadows down here, which led to no price action until the gap, and then it ran on up from 50 to 54. Anyway, keep an eye on Macy's. The other retailer is the biggest one in the world out there, which is Walmart, and you can see Walmart has a bullish cup continuation and reasonably strong uptrend. Actually, one might say an outstandingly strong uptrend from early October, lows of 72 all the way up to 81 now. So we do have at least a 10% range in this. And you can see how strong that trend has been in Walmart. So of all the big box retailers out there, Walmart's the strongest. Target, no good. Home Depot, not really any good. Lowe's, no good. JCPenney's, okay for a cheapie. It's coming back a little bit. Kohl's, no good. I wouldn't trade that. But Walmart looks good, and Macy's looks good. Okay. Now, as a professional trader, it's my job to isolate the strongest instruments and then trade them for as much profit as I can pull out of the dang markets. That's your job too. Job number one, stop losing money, stop the bleeding. Then job number two is make money. And the only way you can do that is to scan for professionally and isolate the very strongest of the charts out there. No BS indicators needed, no stupid overpriced software. Well, Ken, I don't want to think. Can you sell me some $1,000 magic green arrow, red arrow software? You know, sorry, but there's no such critter. It's all about thinking and using your visual pattern recognition skills to cleverly detect what's strongest and then trade it in the upper right side of the chart. Upper right side of the chart. Anyway, take a look at Macy's and Walmart for potential plays in retail going into the year end. We're also going to look at the big picture. The other sector, and I touched on this earlier, is oil. There's oil in them there hills. Take a look at Tesoro. It's done a nice uptrend continuation out of this cup pattern to take out new highs. It's gone from 47 all the way up to 59. So it's a 12-point run in a single burst here this last November. Tesoro looks really good. I like the wide range candle. One of the patterns that I teach in my various courses is how to use wide candle continuations with cups and false breakout avoidance filters, average trading ranges, ADX, other strategies that you can start using. Anyway, this is a wide range candle at the right side of a cup, so I'll be trading Tesoro if it takes out something over 60, maybe 60 and a half to be on the safe skeptic side. Anyway, wide range candle on a high volume in Tesoro tells me that's strong. The other oil sector instrument, Valero, boom shakalaka, we're off, he shoots, he scores, the crowd goes wild, we're taking out new highs to 46.5, booyah. On the count of three, everybody say ka-ching, 1, 2, 3, ka-ching. Everybody's wives are going, what the heck is going on? At husbands or pets or whatever. Anyway, it's funny having hundreds of traders around the world saying the same thing all over the place. And if you missed out, don't worry, you can still say it again. Anyway, what I want you guys to take a look at is, where's the money? Where can you make the most money as a trader? I trade to make money. I don't trade to academically talk about chart patterns except in service of the money-making part of this. So that's what your goal should be, is always figure out how to make money and take profits out of the markets. You know, one of the things that I'm really keen on is make sure that whoever you learn from can show P&L proof that they're real traders. That, to me, is extremely important. I'm turning up the heat on that. It's going to squeeze a lot of my competitors out of business. You guys should all be asking. Before you buy any trading software, any system, or anything out there. By the way, are you even a real trader? Can you kind of show me some P&L proof that you're a real trader? Be a little more discerning, because you have my word. Most of the people, based on what I've learned, what I've discovered, and if you look on trading forums, miscellaneous forums out there, you see a deep, well-deserved skepticism of the vendors out there. Most of those guys are not real traders. So make sure they're just salesmen and marketeers, and they do joint venture webinars and product launches to sell overpriced crap that doesn't work to you guys. They hate it. You know, my competitors hate me. My traders love me. That's why I've got the #1 attended webinar in the whole freaking business, baby. So thanks for being here. What else I got for you guys? Cast charts for the week ahead for my live room members, and then I'll answer some questions. because I know there's a lot. Cash charts for the week ahead. Survey says, here's number 1. Again, I intentionally obscure the ticker because these are only for my live Trading the Open members. It's another carrot or an incentive for you to join already. If you're not already a member, very popular for a reason. Take a look at the at the different videos of the type of training I do with charts. You should only join a live room if they can actually show you tape reading and 1-minute professional candlestick charts and are really good with their calls, right, within a dime or a nickel of pivots and breakouts. So anyway, that's cash chart number 1. Number 2 is this one. Nice uptrend continuation. Doesn't quite have the 10% range I like, but it does have a steady uptrend. So that's chart number 2. Here's chart number 3, and again, this is for my live room members. The identity of these charts is posted in the members area, so you can log in if you're a Trading the Open member and see. This is chart number 3. It's gone from 70 up to 82, so really nice move in that one. Here's chart number 4. What I like about this one is it's gone from 37 up to 41, so it's ran up a 10% 4-point range. This is chart number 4, and that's in the members area, the identity of that chart. And the last one, this is just an extra bonus for my live room members who happen to be here with me. So, and remember too, if you're a live trading room member, we do have a bonus webinar coming up in just under half an hour. A full hour. I do these the last Saturday of every month, of which today is that day. And we've got a full hour training session coming up for Trading the Open members at 11 o'clock. So for those of you not yet live room members, I'm not going to have time to process your membership in the next 20 minutes, but that is a bonus that I do offer, and the recording will be there later today if you do join up later today. So anyway, that's chart number 5. I like this that it ran from 67 all the way up to 74. Okay, so a huge run up. This is one of the best charts out there I can find for you guys as well. So anyway, take a deep breath, Ken, and back to our markets. Remember, learn from real trading proof. Hey, I've got a Black Friday couple of special deals here for you guys. Have I got a deal for you? Swing Trading Success. I just posted a video clip. If you have not yet seen this, this is just the beginning session of 2. I had so many people register for the first one, which is what, back November 7th. If you missed that one, I will give you the entire 2-hour and 20-minute high-resolution Blu-ray quality WMV video download. You can copy it to your iPads or mobile devices or Kindles or watch it on your computer, whatever you want. That's included, plus an upcoming advanced session. And the advanced topic event coming up December 17th will look at breakout patterns, some additional professional entry plays, advanced position sizing and scaling, the money side of how to do this correctly, high velocity swing trading entries, my very best ones, including some new ones for our current markets. I think you'll be really pleased with those. And also how to use P&L, profit and loss based swing trading entries and exits, some professional traders tips. So it's only $127 too. I'm not charging $249 or $297 like I used to. I'm dropping the price in the spirit of being friendly on everybody's wallet. So what you get is a almost 2.5-hour high-resolution video download of the one I just did a couple weeks ago, plus an upcoming December 17th hour-long advanced topics live webinar, plus the video of that once that's available. So you get a great deal for $127. This is my bestseller of the year for a reason. It's a really good deal. You have my word on it. You know, I'm a real trader. I teach you. I want to give you a free sample, kind of like if you go to Costco and you get a free sample of a cookie or whatnot. Through what is it, 12/04. So that's this coming Wednesday. I'm knocking 60% off my Trade Mastery coaching program. And what that is 12 different events once a month. The last Thursday of each month, all of us get together online. I stick around for up to an hour after each session, and we do Q&A work. Traders will often bring me charts, and I can post those for you guys if they want. We do success coaching, and it's only $597. Unlike these people who charge, like, added zero to that. They charge like thousands of dollars, and they're not even real traders. And they only do coaching for a couple, 3 months, and they kind of do some kind of like a force feed template thing, and you must be disciplined and keep a trading journal. And how did you feel about that last trade? Give me a freaking break. You want to learn how to make money as a trader is your goal. That's my job number one, right? That's all I care about. Anyway, so I teach you a lot of things in this, different topics based on the very top, most requested topics: entries and exits, position sizing, scaling. We look at 3 core areas. I'm not going to take time on the site here. Go look at the site for all the details and a video of me talking to tell you all about this. But we look at financials, discipline, and technicals. And that's my premium coaching program, and I'm well aware I should be charging $1,500. You get once a month webinars with me plus a full hour after each one. So that's up to 24 hours of training for just $597. That's a stone cold bargain too. So TradeMastery/profits.com, and the goal is to help you, trade better. That's a very reasonable deal too. I'm one of the industry's top guys, and I prove I trade. If anything, I should be charging $2,000, $3,000 for my coaching programs. I know I should be. It's my marketing consultant says I should, but I'm like by traders for traders. So I want to be easy on your wallet and give you a chance to keep most of your money and just give me a little bit to cover my expenses. So anyway, Trade Mastery, that's for the year 2014. As an extra bonus, if you register by Wednesday, I'll also give you access to the upcoming December 26th. I've got the last one of this year's class. Our graduating class graduates this December. You guys will get access to that as a bonus. You get a total of 13 different events, all for just $597. So take a look at the long video I put together, me talking and telling you guys about it. Now I only have about 5 minutes left. So anyway, those are my 2 things. I hope I've earned your trust. I hope that you do well as traders. I hope you had a great Thanksgiving. I hope you have a great trading week ahead. And thanks for being here, everybody. I appreciate it. Hey, let me answer any questions. I'm 49. I totally don't look 49, do I? Anyway, it's people are amazed when they hear that. I'll be 50 on January 19th next year. I'll have a special 50th birthday bash. I was going to do it in Vegas, but the wife says, "Ken, enough Vegas. You go there all the time." I know a lot of the managers there and casino bosses and all that, so I'm very well connected in Vegas. Anyway, Swing Trading Success. You do want to buy that if you've not bought that. If you've already just registered, I'll be sending you the link to the previous one sometime during the next week or so. So give me a chance to catch up. I've got a lot that I've got to catch up on, so a lot of things to do. I'm a busy guy. And available separately too, to be continued, is the Trade Mastery Coaching Program, and that's a Black Friday Deals Week special. Looks similar, right, to something else. Just $597. That's a bargain. We get together once a month for an entire year ahead. That's the lowest I've ever offered it at, by the way. Normally when I offer this on sale, it's like $700-800, but I thought I'd cut it down even further to make it affordable for everybody, right? It's a very good price at $597. It's not like it's $2,000 coaching program. So it's a good deal. You have my word. I'll give you my very best and do a lot of thoughtful Q&A time with you at the end of each of the 12 events, all for just $597. No upsells, nothing else to buy. I'm not going to sell you any software or Platinum Mastermind $10,000 coaching programs or none of that shenanigans. So competitors hate me, traders love me for a reason. I'm making it the biggest attended, best event in the history of the trading. I've not seen a regularly attended webinar series that pulls over 200 or 300 people. We're up to 2,400, baby, and we're going to get stronger and bigger over this year's upcoming year ahead as well. So a lot of exciting things to work with for you guys. I want you guys to make successful trades. It works for all of us, right? If I can keep you in the game and making winning trades, you can work with me for a lot of years. So I want to give you my best so you got a shot, right? I'm a real trader. I want you guys to be real traders too that can make it. So let's see. Oh, no, thanks. Monique saying thank you, great price. Yeah, and for all of you who registered, I appreciate that. Oh, thanks. Brock saying off to Toastmasters session this morning. That's a good place to learn how to speak. I didn't do that. I used to run a professional training company. I worked for companies like Rockwell International. We built the GPS satellites, the Space and Satellite Electronics Division in 1991 in Seal Beach. I worked for McDonnell Douglas in Long Beach, Ford Motor Company in Dearborn, Electronics Division. Then I went on to be a consultant for companies like Chevron, Sheraton, Hyatt, a lot of big organizations, and ran professional corporate training. By the way, that's another advantage I offer, and I'm a UCLA grad with 2 degrees, UCLA and Cal State Long Beach, industrial psych, so a lot of communication and connecting with people type of training. One of the things that I offer to you is a former professional course, and I used to teach MBA courses for University of Phoenix for 6 years, so I'm a workaholic. That's what I do. Anyway, what I bring to the table is proof that I'm a real trader, but more importantly, the capability to do interactive training with you, and the ability that from a professional training standpoint, that my competitors just can't match, right? They can't match us. I'm a professional corporate trainer plus real trader and former corporate quality engineer and statistician and the rest of it. A very busy life I've had. And I offer a lot to you that my competitors don't, frankly. They don't have the same level of competency or professionalism. So thank you for your trust. I appreciate it. I hope that I can be a part of, however small, I hope that I can be a part of your success as a trader as you move forward in this upcoming holiday season for the rest of the economic. Monique's asking, where do we learn the correlations between different markets? Well, that's something I can teach in the different, the premium events I do. So just bring a question and ask, and I can answer it during the premium events. Let's see, from Chrissy, do inside bars give you pause for reversal? No, only new lows. The inside bars are indeterminate, because look at this. These are all inside candles, for example, in the S&P. You can see inside candles, but we still took out new highs on Friday. So inside ranges, look at them like doji or spinning tops. They're undecided. They don't know which way they want to go. Wait for new highs and then be a little cautious and park a buy stop order. I use buy stop limit orders above previous highs to keep out of false breakouts and then on momentum continuation advance plays. So good question from Chrissy S. Let's see, someone's asking, are the ones that I say weren't good to trade good for shorts? No, the volatility isn't there. Don't trade it. I got just a few minutes left, and I got to go for my 11 o'clock for everybody. But thanks for being here. I appreciate it, guys. Hey, thanks, Mike. Hey, fellow Coloradan, I appreciate that. And thanks, Mira. Good to be there. Hey, Terry. Let's see, a question from BW about, please explain the difference from a minor gap and a large gap. I cover all that in my How to Trade Gaps webinar series that I just did. So I cover the criteria for how to identify not only entries and exits, but how to scan for the very best of the gaps and what makes for a tradable minor gap continuation versus I'll still trade large gaps, but on lighter size, be more cautious. And there's a couple of more technical signals you really want to look at. And I teach that in howtotradegaps.com. Not available now, but maybe next year I'll relaunch it. Most of my courses, since I'm an army of one here, I'm limited on the time that I can allocate to each of the different courses. So when I do offer something, it may well be a couple of years before I offer it again. So I cycle through the curriculum as time permits. So, but yeah, I do have that in that course. So anyway, thanks so much for being here. Just the last call to action. Take a look at the Trade Mastery Profits. This one's really cheap, the Swing Trading Success. They're both cheap.